Hello everyone. Now let's see a very small chapter, accounts and records. And this is also a very straightforward chapter, fully theoretical. You have to just remember whatever is given there. Section 35 says accounts and other records. So what accounts you have to maintain, that's given. Absolutely theoretical. You can expect one question in 2 to 3 attempts. Means question will not come in every attempt on this chapter, but in 3 attempts you can expect one question of around 4 marks. That's it. So let's see. Let's go through it once. Every registered person shall keep and maintain at his principal place of business, as mentioned in the certificate of registration, a true and correct account. True and correct. Now what is the difference between the two? It should be true and correct also. Of production or manufacture of goods if you are running a factory. Then inward and outward supply of goods or service or both. This everyone has to maintain. Inward and outward supply. So inward supply will be of raw materials and stock in trade, etc. And of course outward supply means the sales. And for services, the services. Then stock of goods. So you have to maintain stock records. Then input tax credit availed, ITC record, and output tax payable and paid, and such other particulars as may be prescribed, that is under the rules. Provided that where more than one place of business is specified in certificate of registration, the accounts relating to each place shall be kept at such place of business. So if we have branches, all the branch will also have to maintain similar records. Provided further that the registered person may keep and maintain such accounts and other particulars in electronic form in such manner as may be prescribed. So you can keep your accounts in electronic form also, like on Tally, etc. Then every owner or operator of warehouse or godown or any other place used for storage of goods, and every transporter, irrespective of whether he is registered or not, shall maintain records of the consignor, the consignee, and other relevant details of the goods in such manner as may be prescribed. So everything is as may be prescribed by the rules. So warehouse keeper and the transporter, they also have to maintain similar records of consignor, consignee, and the nature of goods which have been transported or kept in the warehouse. Then commissioner may notify a class of taxable persons to maintain additional accounts or documents for such purpose as may be specified. So certain class of people can be notified to maintain additional accounts and documents apart from the normal accounts and documents. Means special accounts can also be prescribed. Then where the commissioner considers that any class of taxable person is not in the position to keep and maintain accounts in accordance with the provisions of this section, he may, for reasons to be recorded in writing, permit such class of taxable persons to maintain accounts in such manner as may be prescribed. Means a relaxation can also be given. This is for the small taxpayers because they cannot maintain all the records. It will be very costly for them. So they can be given concessions. Then subsection 5 says that every registered person whose turnover during the financial year exceeds the prescribed limit, that is called as the threshold limit for audit, shall get his accounts audited by a chartered accountant or a cost accountant and other records and chartered accountant, accounts and other records, and shall submit a copy of the audited annual accounts, the reconciliation statement under subsection 2 of 44, and such other documents in such form and manner as may be prescribed. Means the audit report form will also be prescribed. And the reconciliation statement is also to be submitted. Though we'll study this reconciliation statement later on in section 44. Section 44 deals with annual return. So that we'll study in the chapter of returns after this chapter. And if I just tell you a brief about it, it is a reconciliation of value of supplies. The value of supply that we have mentioned in the annual return and the value which has been mentioned in the audited financial statements. So if there is a difference in value, you have to make a reconciliation statement. That why the difference. So it's like that, it's simple. Audit has to be done. Then a proviso has been inserted by the Amendment Act of 2018, which says that nothing contained in this subsection shall apply to any department of the central government or a state government or a local authority whose books of accounts are subject to audit by Comptroller and Auditor General of India, or an auditor appointed for auditing the accounts of local authorities under any law for the timing in force. So if CNAG is already conducting the audit, or in case of local authorities some auditor has been appointed by those local authorities, then that will suffice. You don't need to appoint another auditor under this section. Okay, simple. And lastly, it says subject to provisions of clause H of subsection 5 of 17. 17.5H means lost or destroyed goods. Just write down lost or destroyed goods. This we had seen in ITC chapter, section 17. So if your inputs or your finished goods have been lost or destroyed, means they are not in stock. So it says subject to lost or destroyed goods where the registered person fails to account for the goods or services or both in accordance with provisions of subsection 1. In subsection 1 we saw that you have to maintain the records of the goods. So if suppose some goods have been lost or destroyed, they have to be mentioned there. And if you don't mention them as destroyed goods and still they are not found in your possession, then the proper officer shall determine the amount of tax payable. Means it will be deemed to have been removed. Like for example, your stock should be 5,000 units, but the actual stock found in your possession is only 4,800 units. Means there is a shortfall of 200 units. So the officer will ask you, why this difference? And you would say that they have been lost. So if they would have been lost, you would have recorded for it. You would have recorded it. Why haven't you recorded? If not recorded, then that 200 will be considered as deemed to be removed and you would be liable to pay tax on that. And the officer will determine the tax payable. So that is the section, and then followed by the relevant rules. So let's see. Maintenance of accounts, rule 56 says that every registered person shall keep and maintain, in addition to particulars mentioned in subsection 1 of 35. So in addition, so all the points that we saw in subsection 1 you have to maintain. Apart from that, you have to maintain these records also. What? A true and correct account of the goods or service imported or exported, exported, or of supplies attracting payment of tax on reverse charge, along with the relevant documents, including invoices, bills of supply, delivery challans, credit notes, debit notes, receipt vouchers, payment vouchers, refund vouchers. All the documents have to be maintained. And every registered person other than person paying tax under section 10, means the normal taxable people, shall maintain account of stock in respect of goods received and supplied by him, and such account shall contain particulars of opening balance, means stock record, opening balance, receipt, supply, goods lost, stolen, destroyed, written off or disposed of. This is that section 17 subsection 5 clause H. So that we have to maintain, you have to write in your stock register that the following goods have been lost or destroyed or stolen or written off or disposed of by way of gift or free sample, and the balance of stock including raw material, finished goods, scrap and wastage thereof. So complete stock account has to be maintained. Then every registered person shall keep and maintain a separate account of advances received, paid and adjustments made thereto. Advances received or advances given, and the adjustments. Adjustments means against supplies. And every registered person other than the person paying tax under 10, means other than composition dealer, shall keep and maintain an account containing details of tax payable, including tax payable in accordance with provisions of subsection 3 or 4 of 9, that is reverse charge. Then tax collected and paid, if you are liable for that, TCS, how much tax you have collected and paid. This is for the ECO, electronic commerce operators. Then input tax credit. So all these details you have to maintain. Okay, tax payable, then tax which is payable on reverse charge, then tax collected and paid, input tax credit, ITC claimed, together with a register of tax invoice, credit notes, debit notes, delivery challans issued or received during any tax period. Delivery challan means, as we have seen in earlier chapter, that sometimes you may not issue the tax invoice at the time of removal, but you will issue just a delivery challan, and tax invoice can be issued later on. Then every registered person shall keep the particulars of names and complete address of suppliers from whom he has received the goods or service chargeable to tax under the Act. From whom you have purchased the goods, keep their names and complete address. The names and complete addresses of the persons to whom he has supplied goods or services, means your customers, where required under the provisions of this chapter. Then complete address of the premises where goods are stored by him, means godowns, warehouses, etc., including goods stored during transit, along with the particulars of stock stored therein. Then if any taxable goods are found to be stored at any place or places other than those declared under 5. So if it is found that you are storing goods somewhere else and not at the place which for which you are keeping the records, without cover of valid documents can be supply documents, the proper officer shall determine the amount of tax payable on such goods as if such goods have been supplied. They will be deemed to have been supplied. So if suppose your goods are found at a warehouse which you haven't disclosed, means it's tax evasion, basically. You have removed the goods from a factory and you have stored it in a warehouse, and you are not declaring those goods. And if they are found, then it is deemed to be removed. You will be liable to pay tax. Simple. And every registered person shall keep the books of accounts at the principal place of business and books of account relating to additional place of business mentioned in his certificate of registration, and such books of account shall include any electronic form of data stored on electronic device. It includes electronic data also. Then any entry in registers, accounts and documents shall not be erased. You cannot erase any entry. Once made, it's made. Effaced means rubbing off or overwritten, and all incorrect entries otherwise than those of clerical nature shall be scored out under attestation. Scored out means like I scored off that 41. So you just scratch it off with initials, attestation, and thereafter the correct entry shall be recorded, and where the registers and other documents are maintained electronically, a log of every entry edited or deleted shall be maintained. So if you are maintaining your accounts in Tally, you have to maintain the complete log of all the entries that you have made, as well as amended, as well as erased and deleted. Then each volume of books of accounts maintained manually by the registered person shall be serially numbered. If you are maintaining the books in physical form, cash book number 1, 2, 3, 4, 5. Now you all know this point because you have audited so many accounts. Okay, so they have to be serially numbered. Cash book number 1, cash book number 2, ledger number 1, ledger number 2, ledger number 3, ledger number 4, and so on and so forth. Then unless proved otherwise, if any documents, registers or any books of accounts belonging to a registered person are found at any premises other than those mentioned in the certificate of registration, so your account books are found in my possession, they shall be presumed to be maintained by the said registered person. It will be deemed as if they belong to you. This is a deeming fiction. Otherwise you may say tomorrow that no, those registers don't belong to me. But here the deeming fiction is they are deemed to be belonging to you. Means whatever entries are found therein will be deemed to be correct and you will be liable for that. And every agent referred to in clause 5 of 2 shall maintain accounts. The agents, they also have to maintain the accounts depicting the particulars of authorization received by him from each principal to receive or supply goods or service on behalf of such principal separately. So you should have authority letters and you have to keep those authority letters with you, which authorizes you either to purchase on behalf of a principal or to supply on behalf of principal. Then particulars including description, value and quantity of goods or service received on behalf of every principal. Particulars including description, value and quantity of goods or service supplied on behalf of every principal. Means you have to keep principal wise account. If you are agent of say 5 principals, then you have to maintain accounts each principal wise. That how much goods I received for principal A, principal B, principal C, D, E, and how much goods I have supplied on their behalf. Then details of accounts furnished to every principal, the accounts that you furnish to your principal, those details. And tax paid on receipts or on supply of goods or service affected on behalf of every principal. Because he is also liable for payment of tax. We have seen this many times before. Agents are liable to pay the tax. Then every registered person manufacturing goods shall maintain monthly production accounts showing quantitative details of raw material or services used in the manufacture and quantitative details of the goods so manufactured, including the waste and byproducts thereof. So first you have to maintain a quantitative details, means the kilogram records, how much quantity consumed, how much quantity product produced, how much has gone into waste, and so on and so forth. Then every registered person supplying services shall maintain the account showing quantitative details of goods used, means again the inputs used in the provision of service, details of input services utilized, and the services supplied, means the output service. So Farooq Haque has to maintain these records. How much inputs I have used, like paper and all, because they will form part of my service, because I am making the notes and sending to students. So I will have to maintain the records of my inputs and the inputs used, as well as input services used and my output services that I have supplied. Then every registered person executing work contract, next point is for work contractors, shall keep separate accounts for work contract. Separate accounts means if I am undertaking 10 work contract for 10 different people, or maybe for the same person, but still I'll have to keep separate records for each work contract. Okay, separate accounts means separate accounts for each work contract, showing the name and addresses of the persons on whose behalf the work contract is executed. So work contract number 1 for Mr. Hariom Enterprises, work contract number 2 for Om Enterprises, work contract number 3 for Hariom again, work contract number 4 for Hariom again, Home, and so on and so forth. So it may be same party, it may be different parties, but you have to keep separate records for each work contract. Okay. Then description, value and quantity of goods or services received for execution of work contract, that is raw material which you receive for execution of work contract. Then description, value and quantity of goods or services utilized in the execution of work contract. So one is for received, one is for utilization. So you have to maintain the records of the things received and then the consumption. Then details of payment received in respect of each work contract, payment that you receive from your principal, and the name and addresses of suppliers from whom he received the goods or services, the list of all the suppliers. So you just have to read this 3-4 times. Okay. Then the records under the provisions of this chapter may be maintained in electronic form, and the records so maintained shall be authenticated by means of digital signature also. Strike off that 42. Then accounts maintained by the registered person together with all the invoices, bills of supply, credit debit notes, delivery challans relating to stocks, deliveries, inward supply and outward supply shall be preserved. So forget this. This is important point. Preserve for a period of period as specified in section 36. So that we'll see in the next section. And shall, where such accounts and documents are maintained manually, be kept at every related place of business mentioned in the certificate of registration, and shall be accessible at every related place of business where such accounts and documents are maintained digitally. So if they are maintained digitally, it can be a centralized database, but if the officer goes to a branch, he should be able to view that database at that branch. So you have to give him the facility of viewing. Okay, so you have to install a computer there, he can view all the records. And as far as physical manual records are concerned, you have to keep them at each such place. Then any person having custody over the goods in the capacity of a carrier, means a transporter, or a clearing and forwarding agent for delivery or dispatch thereof to a recipient on behalf of any registered person, shall maintain true and correct record in respect of such goods handled by him. So all the transporters will have to keep record of handling of goods, how much goods you possess on behalf of various people, and shall produce the details thereof as and when required by the proper officer. So if the officer comes to the office of Kartar Roadways and asks for the details of the goods transported by him, then Kartar Roadways has to give those details, that I have transported so much goods for Farooq Haque classes. And lastly, every registered person shall on demand produce the books of accounts which he is required to maintain under any law for the time being in force. Means if you are keeping some other records also, maybe under Companies Act, maybe under different laws, then those documents can also be called for by the GST officers, and you'll have to produce them. Then generation and maintenance of electronic records, rule 57 is simple one. It says that proper electronic backup of records shall be maintained and preserved in such manner that in the event of destruction of such records due to accidents or natural causes, the information can be restored within a reasonable period of time. So you have to keep electronic backup also, because if you keep all the electronic records only in your computer, and if the computer is destroyed by fire or by earthquake or by flood, if anything happens, then you lose the records now. So you have to keep proper backup on the cloud or anywhere else. Then the registered person maintaining electronic records shall produce on demand the relevant records or documents duly authenticated by him in hard copy or in electronically readable format. So officer can call for these records either in hard copy, okay, give us the printout, or in electronically readable format like PDF, etc. And where the accounts and records are stored electronically by any registered person, he shall on demand provide the details of such files, passwords of such files, and explanation of codes. Codes means the coding that you have used, the software for entries and all, for access, and any other information which is required for such access, along with the sample copy in print form of the information stored in such files. So they can call for the files, the passwords, and the codes also. Then we have seen that point, the operator of godown and warehouse. So the rule is given for them also, that every person required to maintain records and accounts in accordance with provisions of 35(2), if not already registered under the Act, shall submit the details regarding his business electronically on the common portal in ENR 1. Either directly or through a facilitation center notified by the Commissioner. And upon validation of the details furnished, a unique enrollment number shall be generated and communicated to the said person. So if that person who is owning the warehouse or godown is not a registered person, then he has to follow this procedure. He will be given a unique enrollment number separately. If he is already registered, then fine, he already has a registration number. Then 1A says that for the purpose of chapter so and so of these rules, that is of no use, a transporter who is registered in more than one state or union territory, more than one state or union territory, having the same PAN number. So his PAN number will be same, but he is having offices in several states and union territories, so he will have different registrations for all his premises. He may apply for a unique common enrollment number. Now this is interesting. He will apply for a unique common enrollment number, because otherwise his numbers are separate. He has separate registration numbers in all the states and union territories. So he may apply for a unique, one single enrollment number by submitting details in form GST ENR2 using any one of the GST identification numbers, using any one of his GST IN. So if he has, say, 20 GST INs, he can use any one and submit this application. And upon validation of the details furnished, a unique common enrollment number shall be generated and communicated to the said transporter. So the advantage of this is that now you will mention this unique number in all your documents. So you don't have to mention separate GST IN numbers in all the documents. You can just mention this common enrollment number. So that is the advantage. And the proviso says that where the said transporter has obtained a unique common enrollment number, he shall not be eligible to use any of the GST IN numbers for the purpose of this said chapter. Means for the whole transportation and all the documents that are involved there, and we'll see this later on, the what is called as the e-way bill concept. So in that, then you will not mention your GST IN numbers. You will just mention this common enrollment number in all the documents for all your premises situated in whichever state you are. Okay, so all your offices will just use this one single number, common enrollment number, in all the e-way bills and all the other documents. Then the person enrolled under 1 as aforesaid in any other state or union territory shall be deemed to be enrolled in the state or union territory. That's fine. And every person who is enrolled under 1 shall, where required, amend the details furnished under ENR1 electronically on the common portal. So if there is a change, he'll have to amend his registration. And subject to provisions of Rule 56, any person engaged in the business of transporting goods shall maintain records of goods transported, delivered and goods stored in transit by him, along with the GST number of the consignor and consignee for each of his branches. And every owner or operator of the warehouse or godown shall maintain books of accounts with respect to period for which particular goods remain in the warehouse, including the particulars relating to dispatch, movement, receipt and disposal of such goods. All simple points. And the owner or the operator of the godown shall store the goods in such manner that they can be identified item wise and owner wise, and shall facilitate any physical verification or inspection by the officer on demand. So you cannot just store everything together, one upon the other. No, they have to be stored item wise and owner wise. Like if I am storing goods of you, your goods, then I have to store your goods separately, and the goods of Mr. X separately, and the goods of Mr. Y separately. So all of them will be separate, and your goods which are lying with me will also be then classified item wise. Like you are Britannia and you have stored your biscuits in my warehouse, I will store them item wise. That this is glucose biscuits, these are cream biscuits, these are Oreo biscuits, and these are this and these are that. Okay, item wise and owner wise, so that physical verification can be done. Then comes section 36, period of retention of accounts. So what is the period for which you have to retain the accounts? So it is given there that every registered person required to keep and maintain books of accounts and other documents and records shall retain them until the expiry of 72 months. So you have to maintain the records for 72 months. Means 6 years, you can say, from the due date of furnishing the annual return for the year pertaining to such accounts and records. So 72 months will be counted from not the end of the financial year, but 72 months from the due date of furnishing annual return, which is 31st December. So for example, if the financial year is say 2018 and 19, the annual return due date is 31st of December 19. Okay, so if the financial year is 18-19, the due date for annual return would be 31st December 19. So 72 months will be counted from 31st of December 2019. So you have to keep accounts with respect to this financial year till 72 months from 31st December 19. Okay. And provided that a registered person who is party to an appeal or revision or any other proceeding before appellate authority or revisional authority or appellate tribunal or court, whether filed by him or by commissioner, whether the case is filed by him or by the commissioner, is under investigation for any offence under the penalty chapter, that is chapter 19, shall retain the books of accounts and other documents pertaining to the subject matter of such appeal or revision of proceeding or investigation for a period of 1 year after final disposal of such appeal, revision or proceeding or investigation, or for a period specified above, whichever is later. Now what it means is, it's a simple thing, because when we go into appeal goes on for years and years and years together, right? Appeal goes on for 10, 15, 20 years. So if 6 years have expired, that is the 72 months period has expired, will you dispose of your accounts? No. If those accounts relate to subject matter of appeal, the point of appeal, if the accounts relate to point of appeal, you have to maintain them even after 6 months, I mean to say 6 years, that is 72 months, till 1 year from the final disposal of that appeal. So if this is the financial year, as I told you again, 18-19, and the annual return filing date will be 31st of December 19. So one thing is 72 months from here. But if there is any appeal in relation to this year, then you have to maintain the accounts. If suppose there is an appeal or revision application, or the case is before any court or tribunal and so on and so forth, etc., then there will be final disposal. Final disposal means where there is no further appeal. If you don't go into further appeal, then that is considered as closed matter, that is final disposal. That can happen at tribunal stage, it can happen at High Court, it can happen at Supreme Court ultimately. So whenever the case is finally disposed of, from here again 1 year. So now you have to see these 72 months or this 1 year, whichever is later. Normally this will be later, but you never know, even this can be later. If there is a final, if there is a fast disposal of the case within this period, then this would be later. So this is the normal time, and this is actually the extension of time, you can say. 1 year from the final disposal of appeal, reference or proceedings or investigation, whichever is later. So this is the time by which, up to which you have to keep those records safe and sound. Okay, so that was it. Simple chapter. And as I told you, you can expect one question in 3 attempts. Not every attempt, but even if it comes, it will come for 2 to 4 marks at the max. So the weightage of this chapter for any exam is 2 to 4 marks. Very simple chapter.